Now, sometimes being able to know the direction of the market could really be a hassle. From just seeing red and blue candlestick printing itself at various points in the market, which might make it a bit hard for you to know when to place a buy in the market, sell in the market, or not to place any trade at all. So in this video, I'm going to show you guys a very simple strategy that you can easily apply on any time frame that can be used to show you the right time to take a buy and sell in the market. Now, this strategy is basically broad of support and resistance. But what is support and resistance? Now, support is basically the point where the market gets to that it can't continue to go down further. So this is just like an invisible line that when price gets to that line, it finds it hard to cross back. As you can see, there was like a very big push phase and then the market came back up, while resistance is that point where price gets to that it can't continue to go up further. Now, all these are invisible lines. You have to go ahead and draw them yourself. Now, the major question will be, how are we going to be able to find out those points of support and resistance in the market, since the market does not mark it up for us? So right here, I'm going to be explaining the simple steps that you can use to find support and resistance in the market, and how you can actually use this to know the future direction of the market. Now, one of the ways that you can actually use to find support and resistance in the market is by looking at where price has already reacted to. Now, just as we said, support is that point where the market actually finds it hard to break. So clearly at this point, we could see that price is really finding it hard to break here. As you could see, so you could see immediately price went down below this line and came up back again. Still the same thing. Immediately price came down, it came up back again. This is trying to show that this is actually a clear resistance in the market. Another point we can actually find out with this is this point right here. In this point, price actually struggled in this point right here. Now, all this information I've actually spelled out here, how is it useful to the current price of the market? We can see clearly that price is literally going down. Now, what we can expect is for price to have like a reaction at this point in the market. Now, that point can also be called a key level because it can act as both support and resistance. Now, whenever price reacts to it, there are two things that can happen. Either price actually struggles to break it, or it actually leads to a change in trend in the market. Now, if price successfully breaks that key level right there, we can confidently place a sell to the next key level in the market. Now, what I just explained is just like the normal price action of finding out support and resistance. Now, one problem about manually finding support and resistance in the market is that you might not know how to do this very well, but you can actually make a mistake and you don't know that is actually a mistake. So I'm going to show you guys a very simpler way that you can do this and apply it on the charts and every other thing. Now, for you to actually make everything very much more easier for you, what you have to do is that you have to come to this indicator section, as you can see right here. So what you have to do is to tap this F button, and what you have to do is that you have to search for the relative strength index. The way the relative strength index setting is, the period has to be 14, apply should be to close, style can keep it like this, then levels should be 30 and 70. So the two levels you are working with right here is level 30 and 70. So basically you don't need to touch any of these things right here. Now, how the relative strength index actually helps us to know support and resistance in the market is through what is called oversold and overbought in the market. Now, overbought is the point in the market where the market goes up that it can't continue to go up further. So at that point in the market is what we call overbought. Then an oversold point in the market is where the market goes down that it can't continue to go down. Now, whenever there's an overbought point in the market, what you're looking for is to take a sell in the market. Now, whenever there's an oversold point in the market, you're looking forward to take a buy because the market can't continue to go down further. Now, your question might be like, how does the RSI actually help us to figure out those points of overbought and oversold in the market? Now, if you can look at the RSI point, you can actually see two numbers. You can see two numbers. The number right here is number 70 and this number right here is 30. So the number 70 actually represents a point of overbought in the market, and what the 30 mark actually represents is a point of oversold in the market. Now, when prices are actually oversold, what happens in the market? The market actually goes up in return. Now, when some people see something like this, they see like 3 bullish candles, they might think that this is actually an uptrend. But with someone that's actually with the relative strength index, they will know that this is actually a setup from the market. And as you can see, price was close to the 70, and what happens? Overbought zone in the market came down. Now, for people that were at this point of the market, they might just think that the market is just going down continuously, but when someone is actually with the relative strength index, they will know that price is literally at the 30 mark, and when price is at the 30 mark, you know that it's actually a no-go area. You shouldn't be placing trades at that time. You shouldn't be placing sales at that point in the market. And you could see price actually showed that this is actually a point of oversold in the market. And what happened? Market begins to go back up. Now, to even make everything more powerful than it is right now, you can go ahead and add in come to this part right here. Then you can go ahead and add in the moving averages. Then what you want to do right here is that you want to change this to the 20. Put this to 20. Then the shift should be 0. Simple method, simple. Apply, close. The pixel, you can go ahead and keep this to be 2 preferably. You can go ahead and hit done, and you have the first moving average in. And what you can do is to add the second moving average right here, which is the 25 moving average. Still the same thing. Shift should be 0. Simple method, simple. Apply, close. Style, pixel. What you have to do is that you have to change this one side. It looks different from the one that we actually have up here. So this is purple. So let's change this to blue. I think blue will be okay. Now we actually have 2 moving averages in right here. Now if you're in the lower time frame, I'll encourage you to use like the 50 moving average. Add in the 50 moving average if you're using it on the lower time frame. But if you're on, like, let me say from the 1 hour to 30 minutes, from 30 minutes upward, I think you can go ahead and just leave it at this. Now this is how the moving averages. Whenever you see price above the moving averages, this is trying to signify a buy in the market. Whenever you see price below the moving averages, this is trying to signify a sell in the market. Now sometimes it's not every time that the moving average is always correct, but when you're using it together with something like the RSI, and you're using the RSI with the moving average, this actually makes everything like a complete duo. Let me show you guys a clear example. Now let's use this for example. As you can see right here, price was literally below the moving average, which means you should take a sell in the market. Now let's look at the relative strength index. Now the relative strength index is now telling us that we should also be careful that price can either go up at any moment, as you can see right there. So when you're moving on a sell on with the moving averages, you're still cautious that hey, at some point the market might actually change direction. The RSI was at 30. Now when price is actually at the 30, that means you should go ahead and take a buy. Now you don't go ahead and take a buy immediately until you see price above the moving averages. Now sometimes the relative strength index can literally be at the 30 or the 70 point, but at that point the market is not yet ready to go up or go down. Now it's the moving average that will actually give you that information whether you should go ahead and take that buy and sell at that point. Now let me show you guys a clear example. Now as you can see right here, price was literally at the 30 mark at this point right here. Now you could see the 30 mark was this point in the market. Now if someone would have gone ahead and take a buy at this point in the market, the person will actually be in a loss. So what you have to do is that you have to wait for price to go above the moving average. Like as you can see in this point right here, price went above the moving average. Yes, you can go ahead and take your buy. When you're taking your buy, you can also look at the relative strength index. Price is very close to the 70. Now when price is very close to the 70, you also need to watch out for a point where the market will start going down. So with this, you don't just get caught off guard and the market going down like this. Now as you can see right here, price is actually at the 70. Now when price is at the 70, you don't just need to take a sell until price is below the moving averages. And where did price go below the moving average? Literally at this point right here. So you can go ahead and take your sell till when you discover that price is at the 30 mark. Now you can see how the relative strength index and the moving average actually give you good signals in the market. So if you guys gain value from this video, you can go ahead and hit the like button, hit the red subscribe button if you're not yet part of the family. And with that being said, I'll see you guys in another one.